Imagine building a multi-billion-dollar fortune, becoming one of the most powerful investors on Wall Street, only to lose it all overnight. This is the true story of Bill Hwang, the mastermind behind Archegos Capital, who turned a $200 million investment fund into a $20 billion empire before it came crashing down in one of the biggest financial disasters in history. Stay until the end to learn how greed, overconfidence, and risky bets led to one of the most shocking collapses Wall Street has ever seen. Bill Hwang was no ordinary investor. He was a disciple of legendary investor Julian Robertson, founder of Tiger Management, one of the most successful hedge funds in history. With Robertson's backing, Hwang started his own fund, Tiger Asia, and quickly built a reputation as a financial genius. Hwang specialized in betting big on Asian markets, turning millions into billions. But in 2012, his success took a dark turn. Tiger Asia was shut down for insider trading. Hwang was fined and banned from managing public money. For most investors, this would have been the end. But not for Hwang. Instead, he found a way back into the game, this time with even fewer rules. With his own personal wealth, he launched Archegos Capital Management, a private investment firm where he could trade without the scrutiny of the SEC. No outside investors, no oversight, just massive high-risk bets. With Archegos, Hwang made one crucial decision that would make him incredibly rich and then destroy him. He used a risky strategy called total return swaps. These financial contracts allowed him to secretly borrow billions from banks and control huge stakes in companies without anyone knowing. By using these swaps, Hwang could gain exposure to stocks without actually owning them. Instead of buying shares outright, banks would buy them for him, and he would profit or lose based on the stock's performance. The problem? He was using insane amounts of leverage. At his peak, he controlled over $100 billion in assets, but only $20 billion was actually his. This meant that if the market turned against him, he wouldn't just lose his own money, he'd owe billions to the banks that financed his trades. But as long as the market kept rising, Hwang was untouchable. His biggest bets? Viacom CBS, Tencent, Baidu, and Discovery. He was so confident that he kept doubling down, borrowing more and more to increase his stakes. It was a financial house of cards, one that was about to collapse. March 2021, Viacom CBS announces a stock offering. Investors expected the price to rise. Instead, it crashed. And when one domino falls, so does the rest. Because of his highly leveraged positions, Hwang's banks, Credit Suisse, Nomura, Morgan Stanley, and Goldman Sachs issued a margin call. They wanted their money back, but Hwang couldn't pay. He was trapped. He had overextended himself to a level that no one had ever seen before. The banks had no choice but to liquidate his positions, and in just 2 days, over $20 billion in stocks were dumped onto the market. Viacom CBS, once one of Hwang's biggest winners, lost half its value overnight. The panic spread, triggering a financial bloodbath across multiple sectors. The collapse of Archegos sent shockwaves through Wall Street. Global banks lost over $10 billion. Credit Suisse alone took a hit of $5.5 billion, the biggest trading loss in its history. Regulators scrambled to investigate how one man's secret of trades nearly brought down the market. April 2022. Bill Hwang is arrested and charged with fraud and market manipulation. The allegations? Using deception to artificially inflate stock prices, misleading banks, and taking on catastrophic levels of risk. But here's the real question. How did banks let this happen? How did some of the biggest financial institutions in the world lend him billions without knowing the full extent of his holdings? The answer? Greed. The banks were making millions in fees off Hwang's trades, so they looked the other way until it was too late. And just like that, a man who had once controlled over $100 billion was left with nothing. His empire, built on leverage and illusion, had collapsed. The collapse of Archegos is a warning for anyone who thinks they can outsmart the market. Here are 3 crucial lessons that could save you from financial ruin. Never rely too much on leverage. Debt can wipe you out faster than you think. Diversify your investments. Never go all in on a few risky bets. Avoid financial shortcuts. If it sounds too good to be true, it probably is. Understand what you're investing in. Never blindly follow hype. If you found this video valuable, make sure to like and subscribe so you never miss our latest financial horror stories. It really helps the channel grow and keeps us bringing you more shocking, true events. What do you think about this story? Was Bill Hwang reckless, or was he just playing the game like everyone else? Let me know your thoughts in the comments below. I read every single one. Want to learn how to build and protect wealth the right way? Download my free guide below.